When I was young in this game, I believed news was power, that if I could just stay ahead of the headlines, read faster, react quicker, understand events deeper than the next guy, I could outmaneuver the market before it had time to adjust. And that belief cost me more money than almost any bad setup ever did. I chased earnings, releases, economic reports, central bank speeches like they were treasure maps, convinced that information itself was the edge, when in reality, information was already priced, positioned, and distorted by emotion long before it reached my screen. The first time I felt truly betrayed by news was during an earnings report that looked flawless on paper. Revenue up guidance raised analysts cheering. I bought into the optimism seconds after the release, certain the market would agree, and watched price sell off relentlessly as if the good news never existed. At the time, I thought the market was irrational. Years later, I understood it was efficient. The news didn't matter. Positioning did. Expectations had already been stretched to the limit, and the event was simply the moment liquidity changed hands. That was the beginning of my education in how news actually works. News doesn't move markets in isolation. It collides with expectations, positioning, and emotional extremes, and the outcome of that collision is what price reflects. I learned that the same headline can produce wildly different reactions depending on context. Good news in a euphoric market often marks distribution. Bad news in a fearful market often marks accumulation. The story people read is rarely the story price is telling. Early on, I made the mistake most traders make. I tried to trade the news itself. Over time, through enough scars, I learned to trade the reaction to the news, and that distinction changed everything. I stopped asking whether the news was good or bad, and started asking whether price accepted it or rejected it. Did price expand with volume and follow-through, or did it spike and fade? Did volatility increase and persist, or did it compress quickly? These questions mattered far more than the headline. During the 2008 crisis, I watched markets drop on catastrophic news day after day. But the real turning points came when the news got worse and price stopped falling. That divergence taught me a lesson. No economics textbook ever could. Markets move on surprise, not severity. Once fear is fully priced, even terrible news loses its power. The same pattern repeated during COVID. Headlines were apocalyptic, uncertainty was everywhere. But the market began to stabilize, not when the news improved, but when it stopped getting worse than expected. That's when I understood that events are catalysts, not causes. They trigger reactions in already positioned markets. Traders who survive long enough learn to respect that distinction. I also learned that news is a psychological weapon. It creates urgency, narrative, certainty, and emotional justification for poor decisions. News makes traders feel informed when they're actually late. By the time something feels obvious enough to act on the risk, has usually shifted to those who are acting last. That doesn't mean news is useless. It means it must be contextualized. I began using news as a map of potential volatility, not as a directional signal. Scheduled events told me when not to trade, when risk could expand beyond my assumptions. Unscheduled news taught me to observe behavior under stress, not to predict outcomes. I learned to respect silence as much as headlines, when markets ignored news that told me more than the news itself. Over time, I built rules around events reduce size before major releases, avoid emotional trades immediately after headlines, wait for price to show acceptance or rejection. These weren't conservative habits. They were survival habits. The traders I watched blow up around news weren't uninformed. They were overconfident. They believed understanding the event meant controlling the outcome. The market punished that belief without mercy. What finally settled in was this: truth. News doesn't create opportunity. It reveals imbalance. It exposes where traders are leaning too hard, where stops are clustered, where narratives have become crowded. And if you learn to read that exposure through price rather than opinion, news becomes a tool instead of a trap. I stopped trying to be right about events and started trying to be aligned with how the market digested them. That shift removed a huge emotional burden. I no longer felt pressure to react instantly. I could wait. I could watch. I could let others panic or celebrate while I observed structure forming. And that patience often placed me on the right side of moves that had nothing to do with the news itself and everything to do with how the crowd responded to it. Over decades, my relationship with news matured into something quiet and functional. I stopped fearing it. I stopped chasing it. I respected it as a force that could change conditions quickly, but rarely changed underlying behavior on its own. News became context, not command. And once I accepted that trading around events stopped feeling like gambling and started feeling like observation, because the real edge was never knowing the news first. It was knowing when the market had already absorbed it and moved on. And that understanding only truly takes root when you stop treating headlines as answers and start treating them as tests. Tests of whether price will follow the story or contradict it. Because in that contradiction lies the real information, the kind that separates traders who react from those who wait and waiting, as I learned the hard way, is often the difference between being used as liquidity and being positioned to respond rather than react when volatility spikes. Because once you internalize that distinction, news loses its ability to push you around emotionally and starts revealing its true purpose as a stress test of positioning and psychology. In the later years of my career, I learned to sit quietly through events that once would have sent my heart rate through the roof, not because I stopped caring, but because I stopped believing that immediacy equaled opportunity. I watched how price behaved after the initial shock, after the algos fired, after the headlines had done their damage. And it was in that second phase, not the first, where clarity began to form. Sometimes price absorbed bad news and refused to fall. Sometimes it rejected good news and rolled over slowly, methodically. Those reactions told me more about market intent than any press release ever could. I learned to treat events as moments where the market shows its hand, not where it reveals its secrets. If price couldn't follow the story didn't matter. That mindset protected me from the emotional whiplash that ruins traders during volatile periods. I no longer felt the need to participate immediately. I could wait for structure to rebuild, for ranges to form, for risk to become definable again. And that patience often placed me on the right side of moves that unfolded hours or days after the headlines faded. Moves driven not by the news itself, but by how traders repositioned in its aftermath. Over time, I noticed that the most dangerous moments weren't the events everyone watched, but the quiet ones that shifted expectations without drama. A central bank saying nothing new. An earnings report that met expectations but failed to inspire. Those subtle disappointments quietly changed behavior, and price reflected that long before commentators caught on. That's when I fully understood that news is less about information and more about confirmation. It confirms who is trapped, who is early, who is leaning too hard in one direction. The market uses events to rebalance risk, and if you're aware of that function, you stop treating news as a call to action and start treating it as a lens. You don't need to predict outcomes. You need to observe responses. You don't need to be fast. You need to be patient. And kid, if there's one lesson I want you to carry forward, it's this. The market doesn't reward those who react best to news. It rewards those who wait long enough to see what the news actually did to behavior. Because trading isn't about knowing what happened. It's about understanding what changed. And that understanding only comes when you give price the time and respect. It needs to show you the truth. And if this story helped you rethink the role of news and events in your trading, take a moment to leave a comment with your thoughts. And don't forget to subscribe so I can keep passing down the lessons the market spent a lifetime teaching me.